Hi, this is Charles Paddy from Smart Currency Exchange, International Payment Specialist. It's Monday the 5th of November 2012 and here is our look at the week ahead. Sterling. Sterling is likely to be affected by two presidential elections happening this week, one in the US and one in China. The Chinese election is obviously less publicised, but certainly the medium to long term will probably be just as significant as to what's going to happen in the US tomorrow. Here in the UK there's a raft of economic data released. We'll have some various data covering the services sector. We'll also have the latest trade balance data as well. But the key influence this week is likely to be the Bank of England meeting on Thursday. Expectations following sort of an announcement by various members of the Monetary Policy Committee last week are for no change in either the interest rate or the level of quantitative easing. Quantitative easing is going to come to an end the current round of financing they have in place, and so I think this is positive for sterling in the short to medium term. Now to the Eurozone. Again, what we've seen is the euro weaken over the last few weeks, moving from 123 against sterling to closer to 125. Again, this is on the back of poor economic data. This week we have Spanish unemployment data being released, and the expectations are that this will probably push the Spanish government one step closer to asking the ECB for a bailout. On the whole, I think that actually would be viewed very positively by the market, because A, it underwrites the Spanish economy in the medium term, and B, will allow other states to do the same as well. So again, I think that hopefully sooner rather than later the Spanish government will ask the ECB for help. We also have the 17 nations of the Eurozone meeting this week, and again I think there'll be significant talks both on Spain and on Greece, and I expect again there'll be various statements that are released to the marketplace which could have a significant influence on the direction of the euro. Now to the US. The US dollar has obviously been the flavour of the last few weeks, strengthening against sterling from 161 plus to under the 160 level as I speak. This is on the back of very good economic data out of the US. Last week on Friday we had the non-farm payroll data coming out much better than expected, which is obviously very positive for the US economy, and expectations is for economic data this week to be positive as well. And of course we have the US presidential election. As they say, it's too close to call at this moment in time, and again I think it's very difficult to know what the effect on the US dollar will be, whether Romney or Obama are actually elected as the next president. So as ever, there's a great deal of uncertainty in the currency exchange markets. Clearly the US dollar is in the ascendancy and the euro is on the back foot, but as we've seen over the last 3, 6, 9 months, things can change very, very quickly, and that is why I think it's so important to get in touch with someone like ourselves earlier rather than later to make sure you have the latest information. Thank you for watching and have a great week.